Day trading is a fast-paced game of skill, strategy, and psychology. While knowledge and analysis are crucial, it is often our habits that determine success or failure. Habits are the automatic responses we develop through repetition. In the volatile world of day trading, these ingrained behaviors can be our greatest assets or our worst enemies. Good habits like meticulous research and disciplined risk management can lead to consistent profits and a thriving trading career. Conversely, bad habits, such as chasing losses or overtrading, can quickly erode gains and lead to devastating losses. Understanding the power of habits is the first step towards mastering the markets and achieving long-term trading success. The key takeaway is that trading outcomes are not solely determined by isolated decisions. Instead, they are the culmination of countless actions, behaviors, and thought patterns ingrained over time. By understanding and shaping our habits, we can influence our trading decisions and ultimately, our results. The illusion of control is a cognitive bias where individuals overestimate their ability to influence random events. In trading, this bias can be particularly dangerous. Traders often mistake short-term luck for skill, leading them to take on excessive risk and make impulsive decisions. The random nature of the market means that even the most skilled traders will experience losing streaks. However, those caught in the illusion of control may double down on losing trades, believing they can control the outcome. This behavior can lead to a spiral of losses and erode confidence. Recognizing and mitigating the illusion of control is vital for making rational trading decisions. By acknowledging the role of chance and focusing on what we can control, our processes and risk management, we can make more objective and calculated trades. Trading is as much a psychological game as it is a financial one. While intelligence and market knowledge are important, discipline is the cornerstone of successful trading. Emotions like fear and greed can cloud judgment and lead to poor decision-making. Discipline allows traders to stick to their trading plans, manage risk effectively, and avoid impulsive actions driven by emotions. It's about staying calm under pressure, accepting losses gracefully, and not chasing quick profits at the expense of long-term success. Developing discipline requires self-awareness, patience, and a commitment to continuous improvement. By cultivating a mindset of discipline, traders can overcome psychological pitfalls and make rational decisions based on their strategy, not their emotions. Section 4. Decoding the habit loop: cue, routine, reward. Habits, whether beneficial or detrimental, follow a neurological loop known as the habit loop. This loop consists of three key components: the cue, the routine, and the reward. Understanding this loop is crucial for breaking bad habits and establishing positive ones. The cue triggers the habit. It could be a specific time of day, an emotional state, or even a physical location. The routine is the action you take in response to the cue. Finally, the reward reinforces the habit, making it more likely you'll repeat the loop in the future. By identifying the cues and rewards driving your trading habits, you can start to modify your behavior. For instance, if you tend to overtrade after a losing streak, you can develop a new routine, such as taking a break or analyzing your trades. Consequently, the reward could be reduced stress and better decision-making. Section 5. Building a foundation for success. Practical steps for better habits. Building good trading habits requires conscious effort and consistent practice. Start by setting clear, specific, and achievable goals for your trading. This provides direction and helps measure progress. Then create a detailed trading plan outlining your strategies, risk management rules, and entry and exit points. Next, focus on building one habit at a time. Trying to change too much at once can be overwhelming and lead to setbacks. Start small, be patient, and track your progress to stay motivated. Celebrate small victories along the way to reinforce positive behavior. Finally, find a trading mentor or join a community of like-minded individuals who can offer support and accountability. Surrounding yourself with a positive and encouraging environment can make a significant difference in your journey towards building lasting trading habits. Section 6. The importance of recovery and structure in trading. The demanding nature of day trading requires consistent recovery and a structured approach. Taking regular breaks throughout the day can help prevent burnout and maintain focus. This could involve stepping away from the screen, engaging in physical activity, or practicing mindfulness techniques. Structure is equally important in managing time and maintaining consistency. Establish a dedicated workspace free from distractions. Follow a consistent sleep schedule, prioritizing enough rest to ensure you're alert during trading hours. Beyond physical recovery, reflect on your trades, both wins and losses, to identify patterns and areas for improvement. Keeping a trading journal can be immensely helpful in this process. Remember, consistent small improvements over time lead to significant long-term growth. Section 7. The Long Game. Habits for Sustainable Trading Success. In the world of day trading, success isn't about overnight riches. It's about developing habits that support consistent growth over time. Good habits, like disciplined risk management and continuous learning, compound over time, leading to exponential improvements in your trading performance. Conversely, bad habits like chasing losses or neglecting risk management can have a devastating impact on your trading capital and overall well-being. Remember that building good habits is a marathon, not a sprint. Embrace the process, be patient, and focus on making small, incremental improvements each day. By understanding the power of habits and implementing the strategies outlined in this essay, you can transform your trading approach, mitigate risk, and set yourself on the path to achieving sustainable success in the markets.